Supreme Court striking down sweeping global tariffs imposed by U.S. President Donald Trump. Let's drill into how the markets are reacting. We're joined by Dec Mullarkey, Managing Director of Investment Strategy and Asset Allocation at SLC Management. Dec, thanks for joining us, and apologies if we do have to break away from you to go to the President live. Your brief takeaway: we saw stocks rally. Presumably the tariff burden on U.S. consumers may be lifted here, at least for a while.
We did indeed. You're right, and it was like a tale of two rallies. Like right out of the box when the headline hit, there was a bump, particularly in consumer-related stocks, just as you mentioned, because those are the ones that are at the core of this, be it apparel, footwear, some appliances. And then as the details came out, that faded a bit. And the primary thing there was that the Supreme Court, although they had ruled in favor of squashing these tariffs, they had pretty much pushed it back to lower courts to decide on the refunds, which is going to be a messy process. And I think initially investors were hoping they would opine on that quite quickly, but that'll have to go through the courts. So I think everything calmed down, and some of the rally backed off a little on that news.
That's interesting. Maybe we could pop up an intraday for Lululemon, Lulu, or Nike, NKE, because they initially bounced on people saying, well, all the stuff they bring in from Asia, they'll face less of a tariff burden. But then the stocks gave up some of the gains.
Exactly, and this captures it perfectly. That you got that bump right out of the box, just as the headline ran across. But then, as everybody dug into the news, you saw that kind of sell-off, or if you will, a correction on that. And of course, the White House was getting their message out alongside this, saying, "Oh, we have other alternatives here. We can impose other things." And I know we're right on hearing the president come on and speak about some of this, but the markets started to balance that out and recognize that this may not be immediate.
CNN quoted the president as saying this was disgraceful, but I'm sure we'll hear from the man himself shortly.
Well, he's very colorful in all his language, as everybody knows, of course. So yes, he got right out there on that. But it is interesting. I mean, it's positive for Canada because they were getting hit with this, fentanyl case, and that will be backed off here. So that may give some relief to Canada. But as I said, it is a bit of a long road from here in terms of where this is going to end up.
Yeah, it's interesting. A lot of our goods that were covered by the North American Free Trade Agreement have been exempt from tariffs, but certainly our steel and our aluminum and our parts of our car industry have been hurt here. What is your broad strategy, apart from tariffs? I know that's a bit, how is the play, Mrs. Lincoln, but what is your broad strategy for the U.S. market?
So the main thing is to be kind of super diversified. I mean, that's kind of the number one thing, because it's hard to pick the AI winners and losers, and that's kind of dominating a lot of what's going on. The AI theme is alive and well, but everybody is calibrating around where is that going to end up. And the broadening out has been a complete positive thing. You've seen that happening within the S&P this year in terms, and in fact, it started back in October of last year, where you've seen reallocations away from tech. Some of that was concerns around bubbles, but also to the beat up sectors, and they're doing well. And you're also then seeing diversification to small cap have outperformed large cap for over that period of time. And then you see income producing stocks like high dividend are outperforming momentum. And again, there was concerns, I think, around valuations on tech. But I think at this point, it's not just a sell tech. Even within tech, there's quite bifurcation in terms of hardware, or certainly chips, are doing very well, and then the software names are getting beat up. And then I would say probably indiscriminately, where everybody's concerned about AI is going to come along and just obliterate all the software out there. That's a little bit of a stretch, but normally when you've got these readjustments, there is a little bit of overreaction, maybe thematically, on the power of AI.
I wonder, people are paying for AI, but of course we're so used to getting stuff on the internet for free. I wonder, will it be possible to induce many consumers to pay $200 a month, for example, for AI?
No, you're hitting on the exact issue, right? Who is going to pay for this? And will it be all just through advertising? I mean, enterprises probably will be willing to pay for all of this assistance. I mean, Copilot is showing up in Microsoft's products right now, and there's a little bit of an extra charge there, and companies are willing to pay for it. But that is at the core of it. How does this get paid for? Is this a subscription model? Is it through advertising? Certainly for corporate clients, they might be more willing to pay for the productivity they're going to see and pick up. But that unequivocally is what markets are worried about. And that has dominated a lot of the conversation around tech earnings. And particularly when they increase their CapEx, right away, the market is asking, wait a second, where's the payout coming from? We need to see more evidence that that's actually happening. So that's going to be the ongoing theme for this year is how does this get monetized? How does it get paid for?
And broadly, what about Mag 7 stocks? Are you underweight, overweight? Because obviously they are super profitable, many of these companies still.
There's no question. I'd say we're kind of neutral. We're market weight, which many times looks overweight. But it's precisely for that. These are, if you look at the profitability for this coming year, they are just, they're crunching out a lot of cash flow. They really have their act together for the most part, and therefore you can't ignore them. And they're at the core of this, and that's the issue where it's good to be diversified, because to your point, like who's going to pay for this? That's unclear. We think AI is real and it's going to deliver benefits. We're not certain where the actual revenue around paying for that is going to come from. So therefore, in that situation, just spread your bets, which is another way of saying be much more of an index investor. And again, certainly being in more defensive old economy stocks, because if we want to call them that, that's been a benefit right now because they're more, dividend paying, kind of income producing. So not a bad place to hide out if you want to tilt a little away from tech. But I think broadly staying kind of index weight is still a good thing in the U.S. stocks at least, or in the U.S. index at least.
Dec, thank you very much indeed. Dec Mullarkey of SLC Management.